While experience is necessary to becoming an expert, it is not sufficient. Experience can be an effective teacher, but clearly only some students listen to their teachers. The people who learn from experience and improve, advance, and with a little bit of luck become experts and leaders in their field. So did you catch the difference? Every trade provides experience, but not all experience is learned from. Learning is a choice. We can take a trade, celebrate or mourn depending on the outcome, and then move on. Or we can take the trade, journal it, think critically on it, despite whether it won or lost. Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hi, it's been a couple months since I've released a must-read book recommendation episode, and so it's definitely time that I turn you guys on to a fresh read that was so helpful and inspiring for me as an evolving futures day trader. So this book was offered to me by one of my good friends and past guests on the podcast, actually, Rod. Rod, you were so right. Author Annie Duke truly is a gem. I read this book a couple times through, actually. First, to fall in love with it, and then second, to extract my favorite quotes and tidbits to share with you all today. So let me tell you about the best and most powerful concepts from this Wall Street Journal bestseller. The book is Thinking in Bets by Annie Duke. As a whole, this book explores how decision-making in uncertain conditions can be improved by thinking like a poker player. Drawing on her experience as a professional poker champion, Duke argues that good decisions don't always lead to good outcomes, and vice versa, because of the role of luck and incomplete information. She introduces the concept of resulting, the common mistake of judging decisions based solely on outcomes, and explains why this leads to flawed thinking. Goodness, how many times do we do this as traders? Judging a trade as good or bad based on whether or not it made money. Guilty. But the assessment is not always complete or correct if that's all we're judging it on, right? Instead, she advocates for framing decisions as bets, which forces us to assess probabilities and acknowledge the uncertainty that is around everything that we do. Duke emphasizes the importance of developing a strong decision-making process, one that includes seeking diverse perspectives and avoiding cognitive biases. If you're a trader, you know viscerally how dangerous biases can be. She highlights how separating outcome quality from decision quality can help individuals learn more effectively. And you know I love a book with actual actionable strategies. This book does just that by offering practical tools for improving judgment, such as forming decision pods using accountability strategies, both of which are highly applicable to the world of trading. Through a mix of personal anecdotes, psychological research, and poker analogies, Duke makes a compelling case for embracing uncertainty and becoming more rational thinkers. Ultimately, Thinking in Bets teaches readers to be less results-oriented and more focused on their process. Let me get into some specifics so you can see what I mean. So the author Annie Duke is a world-class poker player. How did she get there? By using her experiences and her peers to learn and refine her strategies over years and millions of hands of pokers with real stakes on the table. Sound familiar? For me, I am doing that exact thing. But now, just for more than 4 years for me of experience as a day trader and at least thousands of trades executed. One overarching quote from Duke that can start us off reads, "Decisions are bets on the future, and they aren't right or wrong based on whether they turn out well or any particular iteration. An unwanted result doesn't make our decision wrong if we thought about the alternatives and probabilities in advance and allocated our resources accordingly." It is a very true outcome as a trader that many trades will have been smart and intentional setups from within our studied and practiced system, and they will still fail. Failure is a part of trading. That's why risk management is so critical, so that we can keep our losses small and our wins can outweigh over time. Just because a trade is stopped out, that doesn't automatically make it a poor choice. If we kept our position size appropriate for our account size and managed the risk accordingly per our system, then it's just a result. And we live to take another trade when another setup from within our edge presents. And that is a good trading. A 100% win rate is not required to still be a strong, profitable trader. I imagine many of you have heard this next statistic, but for those of you who haven't, Duke informs readers of how research reveals that losing feels twice as bad as winning feels. She goes on to clarify this by saying, that means we need two favorable results with one unfavorable result just to break even emotionally. Why not live a smoother existence without the swings, especially when the losses affect us more intensely than the wins? For her point here, she advises that we aim for more neutrality when engaging in an activity with emotional responses to the decisions we make, which was most definitely includes day trading, right? Because to bounce back from a loss is just harder than staying consistent after one win. If we can accept them all as just a day in the life as a trader, then ideally we can mitigate the risk of a potential deep depression if we ever experience a run on the hard times, hard trading. Sure, celebrating a sick win feels amazing, but the inverse of that can be very painful. I've definitely experienced both. So if you have two, this will make a lot of sense to you as well. The painful, tear or rage-filled periods after big losses can really pull you down, and that just isn't fair. Like, crap days are a part of learning, especially in trading, before you truly dial in your process and your system as a settled, consistent trader. And we deserve to not feel like garbage because we are pushing ourselves to learn something so hard. That's my opinion. I really do believe that we need to give ourselves grace while growing as traders. And this related scientific point that losses are twice as painful as the wins are enjoyable makes sense. So I love the idea of aiming for neutrality after each and every trade. So, when I first heard of this book, I wasn't sure of the value for me specifically, as it was written by a poker player and not a trader. And I like poker as a hobby now and again. However, it's never going to be more than a fun game to me. But check this next quote. Poker players have to make multiple decisions with significant financial consequences in a compressed time frame and do it in a way that lassos their reflexive minds to align with their long-term goals. Sound familiar? It is so much like day trading, making quick calls in seconds with high financial leverage at stake, with each trade to help overall build our accounts and create the financial freedom to fund all of our personal and family goals for years and generations to come. That correlation is wildly similar. And the more I read, the more I could simply hear trade in lieu of poker hand. And it was nearly exactly as effective as an educational or supportive book for traders, definitely. Okay, so let's get into some real meat of the massive benefits of this book then. Duke wrote about the concept of truth seeking, qualifying it as the desire to know the truth, regardless of whether the truth aligns with the beliefs we currently hold, is not naturally supported by the way we process information. We might think of ourselves as open-minded and capable of updating our beliefs based on new information, but the research conclusively shows otherwise. Instead of altering our beliefs to fit new information, we do the opposite, altering our interpretation of that information to fit our beliefs. Holy moly, how much have I done that exact thing in trading? Trading a bias versus the data, that's what that is. Literally, I'm at risk of this, I would say, in every trade, I think. And that's just trading. A bias, essentially, ideally, is made based upon our trading system, data, fundamentals, chart patterns, and our written trade plan prior to the market starting. When we see a chart that makes like long trades seem to be the higher likely direction for a successful trade that day, all of our data supports that. That's how our trade plan is coming together pre-market when we're getting organized. Well, then our bias for that immediate session will be bullish. But The key here is to stay current with the data that prints as the session progresses, because this may need to change. And to be an effective long-term trader, I think it's so important to be flexible with your day, with the information, with what's presenting in front of you. Your trade plan, your bias that you started with might not be how the day plays out. We got to patiently flux as the candles print so that we're always making decisions for the right reasons and not solely based on a pre-market plan before this day truly started unfolding. You can make the best guess, but once the day gets underfoot, that's when you really see what's going on. It's such an important concept for trading and kind of in life too. Okay, so there's a chapter in the book about redefining confidence by calibrating our understanding of a situation. Let me explain. Duke advises us all to steer away from an all or nothing view of what we're doing, such as trading. Instead of saying and thinking that I'm sure this trade is right, that it is healthier and smarter to instead grade it. To instead say, I'm 80% sure, but open to additional information. This allows more growth and better collaboration with peers. It's far easier to say, I was mostly sure, but as information printed, then I adjusted my beliefs with that relevant data. And when I realized as time went on that I was actually less sure, then I cut the trade. So that really is a gentler rationale and approach than going from I thought I was right and now I am wrong, which is all or nothing. That's harsher view of the decision from completely right to then completely wrong. It's so black and white. But rather, she argues that to be open to receive and refine with knowledge, and as the information is presenting, you can adjust your bias. So this is such a more fluid and open approach that is both smarter but also kinder to our minds and our growth as we learn. And so intentionally staying much more open to feedback and communication about a trade, because you know that there is so much to consider and weigh. It's such a better choice and approach to this whole project that we're doing as traders. I think it helps us grow faster too, because we take in more data when our minds are open to hear it. And so in that setting, we should then pick up more gems quicker from our journey and be more open-minded versus closed-minded. As a trader, you want to be able to always be learning and growing. And so this is a definite concept to just don't be so sure about yourself ever, because then you're tuning out too much other important information. I like that. Okay, so the nuances of this next quote is really amazing. First, let's hear the quote. While experience is necessary to becoming an expert, it is not sufficient. Experience can be an effective teacher, but clearly only some students listen to their teachers. The people who learn from experience and improve, advance, and with a little bit of luck become experts and leaders in their field. So did you catch the difference? Every trade provides experience, but not all experience is learned from. Learning is a choice. We can take a trade, celebrate or mourn depending on the outcome, and then move on. Or we can take the trade, journal it, think critically on it, despite whether it won or lost. What did we do well? What did we forget to check? Despite the outcome, did we make sure we were present with all our data and check all our timeframes? What was in support of the trade? And then what was the risk against it? And did we appropriately weigh that? If we can also run it by a peer or a mentor and dissect it further into its lessons, then the learning is further compounded, stronger. When we write out all this information in our trading journal, it can even more so solidify the lessons of that trade. In these ways, it is easy to see how one trade can be forgotten or can provide the trader several lessons. This is a truly powerful concept, in my opinion. Now to zoom out on the big picture after we decide to intentionally learn from every trade we experience. I love this next point. Duke wrote, ideally, as we learn from experience, we get better at assessing the likelihood of a particular outcome given any decision, making our predictions about the future more accurate. This was such a solid concept around utilizing outcomes to improve decision-making moving forward. But the caveat is that we have to be open and learn from all the data available. Take the lessons from every angle so that it doesn't create a bias by looking at the thing too narrowly, but rather just fuels a larger view of similar situations for when we see them again. This idea is amazing for trading because the goal is to become a consistently profitable trader who is confident to slowly trade larger and larger size as our skill and knowledge grows. So then making each trade strengthen our foundation makes so much sense to that aim. Like make it all matter more because we're building bigger. Future predictions would indeed then become more accurate more quickly by spending the time now on each trade session post-analysis. We make it all matter more. We can build faster that way in theory, right? And with what she was saying in this book. Okay, so Duke does a great job covering this topic in the book. So I really do recommend that you all consume the full book very soon. The link, of course, is in the description below to make it easy for you to order. And quick aside, if you are into this episode, I have many must-read book recommendation episodes on this podcast of books that I really found tremendous value in. And I briefly cover the best points for me in those episodes. So please do me a giant favor. Like and subscribe to the Market Mamas podcast real quick, and then you'll more easily be able to find those episodes in the future. And it really does help me out so much. And everything that I put out is because it's taught me, and I want to pay it forward and like share what I've learned and how I've helped grow. So that's like the purpose of Market Mamas. So anyways, thank you. Now back to the wisdom of thinking in bets. I will try to do this next amazing subject just as briefly here. The topic is self-serving bias. Annie states that there's a human tendency. We take credit for the good things and deflect blame for the bad things. Moreover, she adds, we act as if our good outcomes are positively correlated to good skill and our bad outcomes are perfectly coordinated to bad luck. Not that I want to admit it, but when I listened to this chapter, I knew that, of course, I am completely guilty of this same behavior from time to time. I want to feel proud when I nail a great trade. And when my trade is stopped out, it does feel less bad if I can blame some kind of bullshit on it instead of just my decision alone. But I do think that is better if we can also neutralize out here a bit as well. Recognizing that even on the trades that I won, there was risk and I should try hard to not become overly confident. Side note, humility is a rare superpower that I think is amazing in people. So I try to be humble all the time and keep myself kind of grounded. But also, flip of that, when I lose, I want to dissect those trades and consciously take the lessons learned instead of blaming and trying to quickly forget that it ever happened, like swipe it under the rug and, chalk it up to just bad luck and it didn't work out for me and whatever. Like instead, I want it to teach me so that maybe I can make less of those errors in the future. It really has helped. It's helped me get better faster, I think. Okay, here's a question. How do you feel if your peers win their trading morning and you close out red? Another quote from the book, Thinking in Bets, reads, if someone we view as a peer is winning, we feel like we're losing in comparison. We benchmark ourselves to them. This speaks to the competitive nature of humans and definitely traders. And it's fair. It's an evolutionary part of human nature. We have to compete to survive and thrive and take care of our people. It's just a part of us. And it is definitely a contributor, though, right, to FOMO and a potential dissatisfaction when we see that others did better on any given day. But it's arguable that this can seriously impede learning. It makes us more emotional and potentially revengey or sad, which is a dangerous state to be in as a trader. Like, ain't nobody got time for that. Ideally, we need to shift to what makes us feel better about ourselves. So try to shut down that comparison. After all, the saying is, comparison is the thief of joy, and we're supposed to enjoy this life that we're busting our asses for. But also, it's just so freaking unhelpful. Instead, I really like to think about how grateful I am to be an active member of a strong community where it is the most common that most of us end each day green. And then it makes me feel kind of empowered that those people are on my team and we're learning and growing together and we're getting better. And then I can also leverage those strong peers to help remind me of what I might have missed and help me reset for better tomorrow, knowing that like I'm in this strong, settled group and we're all got great skills. It makes me feel very blessed versus revengey and comparison. It's much better. It's a much better energy. Instead of feeling bad when we have to admit a mistake, what if the bad feeling came from the thought that we might be missing a learning opportunity just to avoid blame, or that we might be basking in the credit of a good result instead of recognizing where we could have done better? So that was Annie Duke again, reminding us that ideally we can transform the unhelpful habit loops into something productive. She uses the term a lot that we need to leverage truth seeking for our best long-term goals over self-serving habits, and that accurate self-critique can spur further improvement. Self-critique isn't always a bad thing, right? such as with the best athletes, right? They will review tape after every game, even if their skills were like on point. And to be honest, there's always lessons everywhere if we seek them out. And I know that I'm trying to be the best trader I possibly can. So this definitely resonated with me to show up and do the work and study from everything, because there's nuances and stuff you can learn everywhere if you're seeking knowledge. Okay, so if you are new to admitting your failed trades to a mentor or a community, you need to hear this next part. Identifying a negative outcome doesn't have the same personal sting if you turn it into a positive by finding things to learn from it. You don't have to be on the defensive side of every negative outcome, because you can recognize, in addition to the things you can improve, things you did well and things that were outside of your control. You realize that not knowing is okay. This is so good for developing traders because it encourages them to talk about every trade with a peer or ideally a mentor without shame or fear or judgment or negativity. For one, if you are around judgmental people, you should really consider seeking a new community. I'm just saying. But assuming you have good humans around you, the vibe should definitely be learning together from every trade discussion. I am a profitable trader, but I know I want to keep getting better and better, and I still have so many areas that I can improve and refine. So I am an active member of a community, a member, not a leader, and I show up to every live stream that I possibly can. I take short weekend trips actually also regularly to sit in person with a few of my closest trading friends. And these conversations, every time they teach me something new and they strengthen me as a trader, just talking about trading with other traders who get it. So from my experience as a strong peer group, it really is helpful as an improving trader to have these conversations. Now, speaking of a trading group, Annie refers to this in her life as truth-seeking charter. I've often spoken on accountability partner and or teams. From Duke, massive benefits from this group includes: one, a focus on accuracy over confirmation, which includes rewarding truth-seeking, objectivity, and open-mindedness within the group. Two, accountability, for which members have advanced notice. Three, openness to a diversity of ideas, and agreement along those lines creates a common bond and shared fate among members, allowing the group to produce sound reasoning. Sounds pretty great, right? I can definitely attest personally to the fact that I have received tremendous benefits from accountability people in my closest inner circles. Having that safe space to learn together and support each other is so helpful and progresses your skills faster. And it normalizes the difficulty of the journey to consistent profitability as a trader. This game is not freaking easy. And I argue that other traders are really the only people that really understand how hard it is. So now, for those of you that have mentors already, on fully owning being open to feedback and an alternative viewpoint, author Annie says, as a rule of thumb, if we have an urge to leave out a detail because it makes us uncomfortable or requires even more clarification to explain away, those are exactly the details we must share. The mere fact of our hesitation and discomfort is a signal that such information may be critical to providing a complete and balanced account. This is so stinking true in trading also. If we leave out little bits of information on a trade that we were confused about or frustrated over, this is a lost opportunity. If it's hard trade that you know you don't fully understand and it bothered you, it didn't go well for whatever reason, then these are the ones that especially we should pour it all out over, because you never know what key details someone on the outside looking in could pick up that could be the gem that we were really missing. I love that advice so much. There should be no shame in learning authentically. Plus, I say be the bold one. By admitting openly how you struggled, maybe someone quietly also struggled there, and you could really be doing them a kindness by opening the conversation for them too and normalizing the difficulty some days. It's a win-win. This next one might seem obvious, but maybe not. It reads, when we make in-the-moment decisions and don't ponder the past or future, we are more likely to be irrational and impulsive. I wanted to make sure to say it, even though it's kind of obvious, because I think it is such an important nod to the concept of having a trade plan and executing on your system. When we write up our trade plan as we prepare for our trading session, the outside noise is quieter when we are more focused. We can look left and consider what is setting up. and then think forward on how our ideal trades might play out. And similarly, what a failure of said plan would look like. And then when we click buy or sell, it's from a much more solid foundation for that trade alone. But if we come in it hot because we pulled up the market on our phone and we're pretty sure it's a perfect XYZ setup right now, then that's a much riskier execution stance when you're just kind of pulling it together. I know this and can speak to that because I have most certainly done both. And one feels much more stable and has a much higher win rate and less risk. You know what I mean? Don't act like you've never, because we all have. Okay, so speaking of cocky moves, Duke says, as we know, nearly nothing is 100% or 0%. Any words or thoughts denying the existence of uncertainty, such as always or never, should be a signal that we are heading towards a poorly calibrated decision. Now, this statement makes a lot of sense, right? If, as we are preparing to click buy or sell, her advice is to consider it a red flag if we feel a sense of certainty about what we're doing, such as that a level has to hold because I know this is the support for this session, instead of this level could hold as support if buyers from yesterday are still present in the market. But I'd like to wait and see what happens if these candles close in this area of interest for sure, and then what they're telling me and what the data is supporting. You see how that sounds and feels so much different? What a great point. It's like, oh, she's so smart. Okay, we covered a lot today. As one of the last points I want to cover before you all go is a technique for bigger picture success over the coming years. Duke said, the most common form of working backward from our goal to map out the future is known as backcasting. In backcasting, we imagine we've already achieved a positive outcome, holding a newspaper up with the headline, "We achieved our goal." Then we think about how we got there. So this is about working from the goal backwards to the current necessary actions that will be required in these days right now in order to create our said goal future. Now, this is definitely something that I actually practice in a few different ways. I try to each night spend at least a few minutes when I'm about to fall asleep in future visualization. I will think about a certain part of my life, trading or otherwise, and see myself in that situation a few years from now in full vivid detail. And Annie adds to that the practical work of considering and implementing the day-to-day tasks that would build that life. So what do we need to do right now that creates that, right? So in trading, if we see all the benefits of the financial success we will earn, then in my executions this month, growth toward these points would look like strong and consistent risk management, appropriate position size, and active engagement in an educational opportunities, studying and journaling and practicing. Those are just a few ways that we can work now to create that future. Working backwards is a great plan to conceptualize and break down your growth in this role, right? And last year, Kendra created these magazine covers for us. That's mine right there. This is another clear visualization tool for our intentions as traders so that we can see who we're going to be and how magnificent she's going to be down the line once we've done all the work of right now. So I know I've got work to do to bring that future into reality. And I find that so motivating. Okay, so that was backcasting. The last tactic Duke gives in this book is to perform pre-mortems. We've all heard of a post-mortem, right? Dissecting a body after death to learn what the heck happened. Well, on pre-mortems, this is an investigation into something awful, but before it happens. In doing so, you would consider the worst and what that would work like, the risk of your choices going awry, the whole picture of potential outcomes, the good, but the bad also. It's an eyes wide open kind of energy when you're starting to do something that has risk. From the book, incorporating this type of imagining of the negative space into a truth-seeking group reinforces a new habit routine of visualizing and anticipating future obstacles. As always, when a group we are a part of reinforces this kind of thinking, we are more likely in our own thinking to consider the downside of our decisions. Imagining both positive and negative futures helps us build a more realistic vision of the future, allowing us to plan and prepare for a wider variety of challenges than backcasting alone. Once we recognize that things can go wrong, we can protect against the bad outcomes, prepare plans of action, enable nimble responses to a wider range of future developments, and assimilate a negative reaction in advance so we aren't so surprised by it or reactive to it. In doing so, we are more likely to achieve our goals. I freaking love this because it is not intuitive for me. But when I have done it, it has definitely been so helpful. As a trader, it looks like envisioning getting stopped out. Yep, I said it. And so has my mentor, Jermaine, actually. He recommended this tactic to us last year. And as an additional visualization habit, see yourself in a trade and it goes against you. Any temporary profits it held are now red, and the trade is threatening your protective stop. What do? Do you honor your intended stop loss and take the hit and then take a little break, as your trading system likely, as mine does, as it calls for? Or do you impulsively deepen your stop and, heaven forbid, add to that loser to shift your cost and double down? Well, it is recommended to visualize and aim always to honor your predefined trading system in the way you envision your day going, and then conducting a pre-mortem with your accountability group as to your intentions if a trade turns red and how you will handle it. So that's the theory behind it, right? That should make a stop hit a little less painful and more of a normal outcome for you as a trader. Getting stopped out sometimes is going to happen, so it takes a sting out of it, ideally. You can anticipate that this is a part of being a trader, a stop out. You can deal with it. It's natural to happen sometimes. And small losses are totally recoverable at a later time. But a full tilt, that's the worst. So this tip was really good to help try and normalize small bad outcomes as a part of the work that we are doing, in my opinion. I really found value in it. All right. This was a pretty full episode. But I do love this last quote from author Annie Duke from the end of the book. She wrote, "Life, like poker, is one long game, and there are going to be a lot of losses, even after making the best possible bets. We are going to be better and happier if we start by recognizing that we'll never be sure of the future. That changes our task from trying to be right every time, an impossible job, to navigating our way through the uncertainty." I mean, I couldn't say it better myself if I tried. So we'll end today on that note. Thank you all so much for sticking with me to the end. I did cover my favorite points today, but I most certainly recommend that you read the full book for yourselves too, because it was so quick, honestly, but it was so poignant. It was so on point. It was really well told and explained, and the lessons are, if you think critically on them, they're really powerful. So the link to order a copy for yourself is in the description below. And if you have any must-read recommendations for me or the audience, please drop it in the comment below, because after all, that's how this awesome book made it to me in my library. So thank you again, Rod. I really appreciate you. Okay, take care, everyone. I wish you all a peaceful and prosperous day. Bye.